Say we are in interest calculations, right? So in the previous class, we have done 3 steps, right? Define reference rate of interest. So we have defined the 2 reference rates of interest, ST1 and ST2. Then define time dependent terms. So what is the what is this time dependent terms? Say for example, we are in the fiscal year 2018 and we have taken one term loan from State Bank of India. Then we maintain one GL account, SBI term loan account. Let us assume that we have taken the term loan on 1st January 2018. When you take the term loan, the entry we post is debit bank account or cash account, credit SBI term loan account. So by virtue of that entry, right, in the SBI term loan account, that is posted to credit side. By cash account, 1 lakh rupees. Let us assume the installment is 10,000 and the installment is paid every month. So on 1st February 2018, you have paid first installment, 10,000. When you pay installment to the bank, the entry posted is debit SBI term loan account, credit bank account or cash account. By virtue of that entry, right, that is posted to debit side, 10,000, right? Now, after this 1st February 2018, we did not pay any installments. So assuming that these are only the 2 postings in the SBI term loan account, I want to know what is the total amount of interest you have to pay to bank up to 31st December 2018. In that way, how do we calculate interest? Normally, we calculate interest like this. We have taken the term loan of 1 lakh on 1st January 2018. Then you have paid 10,000 on 1st February 2018. Means from 1st January 2018 till 31st January 2018, we have used 1 lakh from the bank. Yes or no?
Yes, sir.
Right?
Yes.
So on 1 lakh for 1 month, 1 lakh into, and the rate of interest is 12%. So for 1 month, 1 lakh into 1 by 12 into 12 by 100, which comes to 1,000 rupees. Then on 1st February 2018, you have paid 10,000 to bank. After that, you did not pay anything to the bank. So from 1st February 2018 till 31st December 2018, that is for 11 months, right? We used 90,000 from the bank. So on 90,000 for 11 months, 90,000 into 11 by 12 into 12 by 100, which comes to 9,900 rupees. So the total amount of interest you have to pay to bank is 10,900 rupees. That's how we calculate interest normally. But in SAP, the system calculates interest in a different way. Here, SAP system calculates interest on the credit items and debit items separately, and the net interest is posted. Why? I will tell you. Here, the term loan account is just similar to bank account. So in the bank account, debits are always deposits, credits are always withdrawals. When you deposit money into bank, we debit bank account and credit cash account. So in the bank account, debits are always deposits. When you withdraw money from the bank, debit cash account, credit bank account, right? So credits are always withdrawals. Now, on the so in the term loan, credits means withdrawals, right? Debits means repayments. So in this case, on withdrawals, we have to pay interest to the bank. On the deposits, we have to receive the interest from the bank. See here, receiving the debits in the term loan account, debits means repayments, right? On repayments, we have to receive the interest means the bank will reduce, right, the repayment principal amount from the original principal amount, right? That's why we can, in a indirect manner, right, we have to receive interest from the bank on the repayments or deposits. Now, based on that, you have withdrawn 1 lakh rupees on 1st January 2018. So from 1st January 2018 till 31st December 2018, that is for 1 month, right? On 1 lakh, sorry, 12 months. See, again I'm repeating. We have withdrawn 1 lakh rupees on 1st January 2018. So from 1st January 2018 till 31st December 2018, that is for 1 year. On 1 lakh, you have to pay interest to the bank. On 1 lakh for 1 month, 1 lakh into, this one here. On 1 lakh for 12 months. 1 lakh into 12 by 12 into 12 by 100. 12 by 100 means rate of interest. 12 months of 12 months means 1 month, 1 year. So 12,000. This is called debit interest. See, 12,000 you have to pay to bank, right? So interest to pay means expense, right? Expense means debit. According to nominal accounting principle, expense means debit, right? So SAP calls this as debit interest, right? Within brackets. Interest on credit items. Interest on credit items. Okay, now on 1st February 2018, you have repaid 10,000. That means this repayment principal amount is to be reduced from original loan amount, right? That means we have to receive the interest on this 10,000. So from 1st February 2018 to 31st December 2018 on 10,000 for 11 months. 10,000 into 11 by 12 into 12 by 100, 1100 rupees. This is called credit interest. Credit interest means interest revenue within brackets. So credit interest means interest on debit items. Interest on debit items, right? So 12,000 you have to pay, 1100 you have to receive. So net amount, how much you have to receive? So you have to pay 10,900 only. So SAP calculates interest separately on debit items and credit items, and the net interest is posted. So why so? Normally, right, on the withdrawals and on the repayments, the bankers will apply the same rate of interest normally, but sometimes there may be a necessity, right, to apply different rate of interest on the withdrawals and the repayments. Say, for example, on the withdrawals, 12% rate of interest is applied by the bank. On the repayments, 11% is applied, right? That's why, in order to facilitate the use of the different interest rates on the debit items and credit items, SAP calculates the interest like this. See, internally it calculates debit interest and credit interest separately, but when it comes to posting, only the net interest is posted. And these interest rates may change from time to time. That's why SAP calls this as time dependent terms. Path is same as well. SPRO, Finance Accounting New, General Ledger Accounting New, Business Transactions, Bank Account Interest Calculation, Define Time Dependent Terms. Click on New Entries. Interest Calculation Indicator is equal to ST. Interest Calculation Indicator is equal to ST. Currency is equal to INR. Effective from 1/4/2024. Effective from 1/4/2024. Sequential number 01. First term. Term is equal to, here you had one word select. Select credit interest, balance interest calculation. Select credit interest, balance interest calculation within brackets. So credit interest means interest on debit items, right? Within brackets, interest on debit items. within brackets, interest on debit items. Reference interest rate ST1. Yesterday, we defined one reference rate of interest. Reference rate of interest ST1, right? So for the for the interest on debit items, we are linking 12%. Click on save. Now we have to define second reference rate of interest. Second term. Click on next entry button. Interest calculation indicator is equal to ST. Currency INR. Effective from 1/4/2024. Sequential number 02. Second term. Term is equal to select. You add the word again. Select here. Select debit interest. Balance interest calculation. Debit interest, balance interest calculation. So debit interest means interest you pay, right? So you pay interest on credit items, right? Within brackets. Interest on credit items of the term loan. Interest on credit items of the term loan. Reference rate of interest is ST1. Suppose if you want to apply 13%, then you define one difference rate of interest for 13%, that is assigned here. But normally, the bank will apply the same rate of interest on the debit items and credit items. Click on save. Write down the table name. T056A2. T056A2. Then enter interest values. Yesterday, we defined two reference rates of interest, right? ST1 for 12%, ST2 for 11%, right? But we have not defined the interest rates. You have just defined reference rates of interest, that's it. We did not define the actual rate of interest. The actual rates of interest are defined now. Path is same as above. Enter interest values. Click on new entries. Reference rate of interest is equal to ST1. Valid from 1/4/2024. Interest rate is 12%. Again, write down, it is not there. Sorry. Reference rate of interest is equal to ST2. It is not there. Please add again. Reference rate of interest is equal to ST2. Valid from 1/4/2024. Interest rate 11%. Click on save. Table name T056P. T056P. Now, creation of interest account. So when the interest is calculated, system has to debit interest account, right? So we have to create one GL account interest. So you have to identify the account group under which interest account is to be created. For that, go to your account groups. OBD4. Chart of accounts, SS27, right? So we have an account group interest. And the defined number range is 4,400,000 to 4,499,000. So I'm taking 4,400,000. Transaction code FS00. GL account is equal to 4,400,000. Company code SS27. Go to menu GL account create. The account group is equal to interest. The account group is equal to interest. Select P&L statement account. Short text is equal to interest account. GL account long text is also interest account. Go to control data tab. Account currency INR. Select only balances in local currency. Select line item display. Sort key 001. Sort key 001. Then go to create bank interest tab. Field status group G001. Click on save. Now, creation of term loan account. See, for every term loan agreement, we have to create one GL account. Say, for example, from the HSBC Bank, we have taken 2 term loans. On one term loan, 12% you are paying. On another term loan, 11% you are paying. So in that case, you have to create 2 GL accounts. HSBC Bank term loan, 12% account. HSBC Bank term loan, 11% GL account. So for every term loan agreement, we have to create one GL account compulsory, right? So term loans are always part of which account group? Secured loans. The term loans are secured by assets of the company, right? So the term loan is to be created under the secured loans account group. The defined number range is 100, 300 to 100, 399. So I'm taking 100, 300. So open.
Yes, sir. Good evening. Sir, I have a doubt. Sometimes what will happen when we take the home loan or personal or something like that, right?
No, your voice is not. Your voice is very, very far away.
Hello, am I audible now, sir?
Yeah.
Am I audible now, sir?
Yes, you can. I'm audible. Yeah, you are audible now.
Okay, so my question is, sometimes when we take a home loan or personal loan, right? So when we are taking the loans at the beginning, they will say the 6 or 7% is there, okay. But after sometimes during our tenure only, the interest rate will increase. Okay, so in that case, so if we consider that case in here, so every time do we need to generate define a new GL account based on the percentage increased, or how it is, sir?
No. See, here, whatever the interest rate that is prevailing at the time of taking the loan, we create the GL account with that name only.
Okay.
So the interest rate is for the purpose of calculation of interest, right?
Mm-hmm.
So you incorporate that change in interest rate into system.
Okay, so for example,
so where we can incorporate, I will tell you.
Sure, sure.
And one more thing, housing loan, personal loan.
Yes, sir.
They are not applicable to companies.
No, I've just taken the example.
Yeah, you are right. But for others purpose, I'm saying, right? They may get confused. So even the case of term loan also, right? It depends upon. Sometimes they may change the rate of interest from a particular date, right? They are called floating interest rates.
Correct.
Right? That is also possible in the case of term loan. Okay. So when the interest rate is changed, how to incorporate it into system? I will show you, right? Sure. So I'm creating one GL account, term loan account with the number 100, 300. GL account is equal to 100, 300. Company code SS27. Go to menu GL account create. Under type and description, the account group is equal to secured loans. The account group is equal to secured loans. Select balanced account. Short text is equal to HSBC term loan account. So we have taken the term loan from HSBC Bank. Short text is equal to HSBC term loan account. GL account long text is also HSBC term loan account. Go to control data tab. Account currency INR. Select only balances in local currency. select a line item display. Sort key 001. Go to create bank interest tab, field status group G001. Then see interest indicator, ST. So for ST, till now we have defined some values. We have assigned some values, right? Now that interest indicator is assigned in the terminal account master record. So based on the values defined in this interest indicator, the system will apply the rate of interest. Now here the question is, which rate of interest system will apply? How the system can understand which rate of interest it has to apply? Write down here in the page number 62. Write one vertical line here. Right. First to take the notes, I will show you clearly. We have assigned the actual rate of interest 12%. We have assigned the actual rate of interest 12%. To the reference rate of interest ST1. We have assigned the actual rate of interest 12%. To the reference rate of interest ST1. To the reference rate of interest ST1. Just a minute. Yes. Yeah, write down, please. Note, put heading note, right? We have assigned the actual rate of interest 12% to the reference rate of interest ST1. Full stop. The reference rate of interest ST1, the reference rate of interest ST1 was assigned to debit interest and credit interest terms, was assigned to debit interest and credit interest terms under the interest indicator, ST. Under the interest indicator ST. The interest indicator ST, was assigned, the interest indicator ST was assigned in the terminal account master record. The interest indicator ST was assigned in the terminal account master record. With the help of these links, with the help of these links. The system will apply 12%, 12% on the debit items and credit items of term loan account. See, in the HSBC term loan account, right, we have assigned ST interest indicator, right? Now, in the step number 5, enter interest values, right? For the reference rate of interest ST1, we have assigned 12% rate of interest. See, SPRO, Finance Accounting New, General Ledger Accounting New, Business Transactions, Bank Account interest calculation, enter interest values, right? See, ST1. See, for the reference rate of interest ST1, we have assigned 12%, right? Then, in the time dependent terms, we have defined 2 terms, right? 2 terms you have defined ST. First term, select that, click on details. See, ST1 reference rate of interest was linked to credit interest, balance interest calculation. Again, I'm repeating. For the reference rate of interest ST1, we have assigned 12% already. Then this ST1 reference rate of interest was linked to credit interest. Credit interest means interest on debit items of the term loan. This is linked under the interest indicator ST, right? And the ST was assigned in term loan account. So on the debit items of the term loan, the system will apply 12%. Similarly, we have defined another term, right? Sequential number 2. So for the reference rate of interest ST1, we already assigned 12% rate of interest, right? Then this ST1 reference rate of interest was linked to debit interest, balance interest calculation. Debit interest means interest on credit items. So this link is provided under the interest indicator ST, right? And the ST was assigned in term loan account. So on the credit items of the term loan, the system will apply 12%. Clear till now, everybody?
Yes, sir.
Now,
Yes, sir.
this is in the case of one term loan. But your client will have number of term loans, right? And the rate of interest is different. You have taken the term loans from different banks and the rate of interest is also different, right? Here, write one point here. For every actual rate of interest, we have to define one interest indicator, and one reference rate of interest. We have to define one interest indicator, and one difference rate of interest. See, it's compulsory. Now, here we have taken 4 term loans from 4 banks. We have taken one term loan from HSBC Bank, American Express Bank, Citibank, and ICICI Bank. So, HSBC Bank is charging 12% rate of interest. American Express Bank is charging same 12% rate of interest. Then Citibank is charging 13% rate of interest. Right? Then ICICI Bank is charging 13.5%. So, for each interest rate, we have to define a separate interest indicator and a separate reference rate of interest, right? Then, what we do is, we assign 12% to the reference rate of interest P1. So, in our training class, reference rate of interest ST1. Here you can say P1. 12% is assigned to reference rate of interest P1. And the P1 will be linked to debit interest and credit interest terms under the time dependent terms, right? This link is provided with reference to interest indicator PQ, and the PQ is assigned in the HSBC term loan. So this is the flow of configuration values. Now, American Express Bank is also charging same rate of interest 12%, right? In that case, you can assign the same interest indicator PQ in the American Express Bank also. I mean, American Express Bank term loan account also. But the Citibank is charging 13%, right? So you assign 13% rate of interest to the reference rate of interest P2. P2 will be linked to debit interest and credit interest terms in the time dependent terms under the interest indicator PR. PR is assigned in the Citibank. Then 13.5% is linked to reference rate of interest to P3, and the P3 will be assigned to debit interest and credit interest terms in the time dependent terms under the interest indicator PS, and the PS will be assigned in the ICICI Bank term loan account to master account. Here, bottom to top is the flow of configuration values. But as far as configuration is concerned, what we do, first we define 4 interest indicators. I mean, 3 interest indicators, PQ, PR, PS. Then we define P1, P2, P3 reference rates of interest. Then we define time dependent terms for each interest indicator. Then for each reference rate of interest, you assign actual rate of interest. Then in the rest, you create the GL account master records for the respective term loans. And in those term loan accounts, you assign the respective interest indicators. If you understand this flow, you can configure for any number of term loans. Now, assignment of accounts for automatic postings. Assignment of accounts for automatic postings. Here, when the interest is calculated, the system itself has to post the accounting entries. For that, the system should know which account is to be debited and which account is to be credited. For that, we have to assign the GL. See, when the interest is calculated by the system, the entry posted is debit interest account, credit HSBC term loan. Right? And this entry has to be posted by the system automatically. Okay. Then, when the repayment is done, entry posted is HSBC term loan account debtor to bank account. 10,000 is the installment. So actually, this 10,000 installment contains 2 parts. Some amount towards the interest, some amount towards the principal, right? So when you pay 10,000, interest is paid and principal is paid. Yes or no?
Yes, sir.
Others?
Yes, sir.
Yeah. That means this term loan repayment transaction, remember, this term loan repayment business transaction contains actually 2 business transactions. One is interest paid, the other one is principal paid. Principal paid is called GL account paid by the system. So this is one business transaction and this is another business transaction, right? And this interest paid business transaction is identified with one symbol, that is 0002. Similarly, principal paid is represented with another symbol 2000. These symbols were already defined in the system. So for the symbol 0002, we assign the interest account. For the symbol 2000, that is GL account paid, we assign term loan account. Then the system will post this entry automatically. Transaction code OBV2. Click on symbols. See, these are the symbols already defined in the system. 0002 interest paid, 2000 GL account paid. So for these two symbols, we assign the respective GL accounts. Click on accounts. Chart of accounts is equal to SS27. Click on enter. The account symbol 0002. Currency INR. 0002 means interest paid, right? GL account 400. Then account symbol 2000. GL account paid. That is loan paid. Currency INR. Account, loan account 100, right? But in the material, I have given 10 pluses. Why 10 pluses? Here, you have 50 term loans. System calculates interest on 50 term loans. Then interest posted is for the first term loan, interest account data to first term loan account. When the interest is calculated in the second term loan, interest account data to second term loan. When the interest is calculated in the third term loan, interest account data to third term loan and so on. And when the interest is calculated in the 50th term loan, entry is interest account data to 50th term loan. That means in every entry, account debited is interest only, right? So it is enough to enter interest account only once. But for the term loan accounts, you have to assign 50 GL accounts. For each term loan interest calculation, the system has to credit the respective term loan account, right? That's why what we do, we have to assign 50 term loans. Like what? Account symbol 2000, currency INR, account 1,300. Account symbol 2000, currency INR, GL account 1,301. Account symbol 2000, currency INR, GL account 1,302. And account symbol 2000, currency INR, GL account 1,350 and so on. So you have to assign 50 GL accounts. Instead of assigning 50 GL accounts, you can enter 10 pluses. So when you enter 10 pluses, the system will credit the respective term loan account master account. Why 10 pluses? Because the maximum length of GL account number is 10 digits, right? So we have to assign 10 pluses. So filling up the field with all pluses is called masking in system. Click on save. Then configuration is over. End user transactions. Term loan receipt posting. F-02. So as per the example, let us assume we have taken the term loan on 1st April. Document date is 1/4/2024. Type is SCA. Company code SS27. Posting date 1/4/2024. Period 1. Currency INR. Posting key 40. Debit for GL account. Cash account is to be debited. The account is 2,100,000. Click on enter. Amount is equal to 1 lakh. Business area SS27. Look at the screen. Value date is defaulted as current date, right? 20th October 2024. So if you keep the value date as today's date, what happens is value date means what? Expected date of realization of funds involved in the bank instruments like check, demand draft, etc. Right? So if you keep the value date as 20th October 2024, what the system assumes is even though we have received the check of term loan on 1st April 2024, it was realized on 20th October 2024. So the system assumes zero balance in all the previous months. That's why you have to change the value date in your training class, in your practice purpose only. Value date is 1/4/2024. Value date is 1/4/2024. Text being term loan received. Text being term loan received. Posting fee 50. The account is term loan account. 100, 300. 100, 300. Within brackets, term loan account. Click on enter. Amount is asterisk. Business area SS27. Value date 1/4/2024. Value date 1/4/2024. Text please. Click on save. See, document 18 was posted in the company code SS27. So we posted one term loan receipt. Then term loan installment payment. So let us post the payment of one installment, first installment. Transaction code F-02. So let us assume that you paid the first installment on 1st May. So document date is 1/5/2024. Type is SCA. Company code SS27. Posting date 1/5/2024. Period 2. 1st May means second period. Currency INR. Posting fee 40. The account is 100, 300. Term loan account. So in the case of term loan repayment, term loan account is to be debited. Click on enter. The amount is 10,000. Business area SS27. Value date 1/5/2024. Value date 1/5/2024. Text being first installment paid. Posting fee 50. Credit for GL account. The account is 2,100,000. Click on enter. The amount is asterisk. Business area SS27. Value date 1/5/2024. Text plus. I'm just checking the value dates. Okay. Click on save. Now, calculation of interest. This we will see after 10 minutes break, right? Let's have a break of 10 minutes.